Good evening, everyone. I'm Dan Hussey with Zaner Ag Hedge, bringing you a Strategy of the Day update here for August 30th, 2021. I'm going to begin with soybeans here today, and actually, let's take a look at that longer time frame chart. Soybeans in the November contract here. Make sure I got that up. I do. We are still flirting and staying below, and over the last week, we've stayed below the 18-day, 55-day, and 100-day moving averages. Not a great look for the bulls at this time, and honestly, a pretty good reason to show some concern here for the recent rallies that we saw into the end of last week. The market has, faded off, and I believe last week, and I'm going to flip over here to the September contract. Last week, I talked about how September futures had rallied up and hit highs around the 1370 area. November contract failed to follow through with that rally. And for 2 days there into the end of the week, we basically had November saying, hold up, let's not, that new crop contract saying not so fast September. And that end of life kind of price action that we started to see in the September contract, with first notice being here tomorrow, really has sought to cause the most pain for everyone in this market. 2 weeks ago, on Friday, we had an option expiration where the market sold off, put a lot of puts into the money, things below the 13.20 and even below that $13 strike. And then we spent 1, 2, 3, 4 days rallying back up to squeeze those shorts for a test of, really for, if you really get down to it, September up into trendline resistance, as well as a test of its 100-day moving average here at 1372. The market has now spent 2 days selling off and squeezing the long side of this market into first notice, where longs need to be out. So we had commercial sellers getting squeezed, and then now a big drop here today in that September contract, resulting in a reversal of that small uptrend we had, and really, in my opinion, what looks to me a reversal in the trend altogether. And that rally we saw was mostly just a short-lived, short covering rally, a short squeeze. Failed to get above our 100-day, 55-day, and 19-day, 18-day moving averages. The 18-day coming in at 1332, we saw that as resistance today. We failed to even get to the 1341 55-day moving average. This is for the November contract now, and the 100-day moving average up around 1352. The 200-day moving average down around 1252 kind of correlates and is close to that 1240 low from June. And if we do, in my opinion, break below this 1274, we should be going down to that level to test it again. And as we'll see here in just a minute, flip over to our little bit smaller time frame chart here. The 4-hour chart for the soybean November soybeans here. Big level we looked at into last week was this 50% retracement off of the highs from 1378 down to lows. We found resistance into both what I would look at as the 50 to 61.8 line, that inflection zone. We saw the market start to roll over. Monday night here this week, we came back up to test that level and into that resistance yet again, arguably now creating a couple trend lines against the highs that we'll have to use and we'll be aware of into the rest of this week's price action. Let me clean up this chart, get rid of a couple lines here that only really look good on a smaller time frame. The level that today we broke below, that was kind of probably surprised a lot of people, but definitely has sparked, I think, the reason for now a continued sell-off, is this trend line against last week's low through the lows of Friday. We broke decisively below that level and have now punctured the 61.8 line drawn from the lows from last Friday, or 2 Fridays ago, excuse me, through the highs of last week. Breaking below that 1308 level, which, by the way, 1308 was our old low from the month of August that we are now below again, and a big, yet another technical failure here for the market to hold above, hold back above levels that we broke below, came back above, and you'd assume to see a bit of a trend higher here setting in. That just isn't happening, right? There was an open gap on the chart at 1325. We filled that gap here in the overnight session. The market traded was even positive by like 10 cents. And then we just found the rest of the session here today, right, with the sell-off that we all watched happen on the charts. Going down to a smaller time frame chart, the 15-minute chart now. We've got yesterday's open around 1320. The 50% retracement off of yesterday's high to the lows here comes in around 1316, and I'm looking for resistance here into the 1308 to 1310 area. That's drawn from this low to high. It's would be a continuation short. I'll go over some of these types of pulls in my Wednesday or Thursday webinar at 2 p.m. Drawn from a low to a low here. We saw resistance hold. The market sold off, went down into the 23.6, negative 23.6 target. Same anchor, new low. You just grab that fib and drag it down. The next resistance might be around this 1307 to 1310 area. We get above 1310s and certainly above the highs from the afternoon here, or the morning session, I should say. Look for that 1316 area, which again would be a broken trendline resist support, now tested as resistance. So wouldn't be surprised to see the market go up there, test it, hold, roll over, and if that's the case, look out for another dip below $13 and a retest towards the 1277 area. Again, when we take a much bigger step back on the chart, the full 50% retracement from 827 highs to 1480 lows to 1480 highs here could take us down towards the 1150 area, and the equal legs that we've been looking at. If you take this original drop, the 1480 drop down to that 1240, you extend that from either the 1423 high or the 1380 high. You get a confluence of fibs, both 100% equal legs as well as that 50% fib that are just below that $12 handle, 1180 to 1150. Seems like a great technical level. If we go down, we'll find that demand on this chart, and the market will, then could then rally from there. There's some trend lines as well. So if we start to break down again below that 1277 low and that 1240 low, look for that dollar slide down to that area that we've been talking about. Otherwise, this market is very much still in a range. But today's sell-off, at some point, we have to come to the realization that the market just can't get a bid under it enough to push us back towards $14, even get us back up to $13.50, which is kind of the area I was talking about last week that I would need to see the market get back up to feel confident in that move back towards the 1380 highs for the month. It's just not happening. As much as I think we'd all like to sit here and say it will, absolutely could still. Right? We have no perfect crystal ball for these markets these days. They can do whatever they want, and they will continue to do so. But when you consider that we had an outside day relative to our 2 prior days of price action, we were unable to break above the highs of last week, and we fell down to basically lower lows, ignoring the overnight session and just take price action above 1325 off of the charts from effectively just take the day session, and we pretty much had lower lows and lower highs. We did go above and spike up for a quick run there right on the open to 1327 highs for the day session, after the Globex Open, but generally speaking, we fell right back down and closed below the lows from Friday. Not a great look on this chart. So unless this market gets picked up, we rally back above now 1320 area and above the highs of the day session at 1327. I'm expecting, really resistance to probably hold around the 1312 to 1315 area. Market roll back over and continue a downtrend lower. At some point, we just have to accept that that is what's going on, and price action just keeps indicating to me, at least from a technical perspective, that's what should happen. We're definitely still seeing flash sales. Don't get me wrong. That export demand is there, but the chart does what it wants to do at times. Okay, for December corn, let's actually pull up that daily chart. Take a look at where some of our longer term technicals are, because they're really congested here, with the exception of the $5 mark, which is where our 200-day moving average is now. We have pretty much all of our major fibs, the 18-day, 55-day, and 100-day moving averages between 552 and 555. So this market, we've been joking about how 550 is like a magnet. The last several months, we've just come right back to that 550 to 555 area in December corn. It's a lot better to have it ranging up here than down at $3.50 and $4 like we've seen in years past. However, again, that break below trendline support last week, now remaining below that level, not even getting up for a test of it as resistance. Our other, all the moving averages that we broke below last week, we're now holding below. Not a great sign. Today's sell-off of making a outside day, closing to the downside, below today's low at 536, calls into question the 529 lows, and of course, that really calls into question the lows of this range that we've been seeing. So I'm, again, would not be surprised to see a move down to $5 to 5,477. I don't think we hang out down there for very long. I certainly don't really see a market going below $4, but you know, who knows exactly what is going to happen given the price action we've been seeing over the last several weeks. It's been a surprise to, I think, a lot of people that how range bound we've been. Okay, so the full 50% retracement from our August highs to lows here, we almost got up to test that inflection zone. I'd still say that area is probably going to be some kind of resistance between 560 and 570. It's where our old trend line that we failed to break above previously was. There's, of course, new trend lines on this chart that we have to be aware of, you know, through these highs. There it goes. Through these highs that would come in around 580. I mean, 1, 2, 3, 4 tests to try to break above $6 and stay there, and a failure to do so is a big reason why I think we're sitting at 543.5 on this chart and keep putting pressure on the downside. Now, you got to be fair. We've been unable to truly break below or test the $5 mark. We've only stayed below 520 for brief periods, but at some point this range needs to break. And again, I will go back to what I've been saying for what feels like weeks now. Actually, it's been probably over a month, 2 months, going on 2 months now. And it's been impressive to watch this market stay in the range, but it's clearly not developing into a bull trend like we've all been wanting it to. In the face of weather confirmations of yield setbacks, in the face of even good exports, neither corn or beans is willing to take off and break through the figures to the upside, which just usually means that this time of year we'll get that harvest pressure, see a bit of a sell-off, find new demand at those lower prices, which bottoms us off through harvest lows. So over the next 2-week time frame, I do believe we are starting to, that time bomb is starting to tick, and I do think a test lower now back towards 520 will probably break this time down. We'll see that slide towards $5 to 480, maybe close that open gap at 477. Because remember, both November beans at 1440 have an open gap, and December corn has an open gap up here at 634, both of which I would like to see close. But the way I think we do that is by heading slower or lower first. The full 50% decline from today, well, first off, we had a bit of a trend line against the lows that was holding through last week. We broke below that level here on the December corn chart as well. From our highs of last, up at 494 through the new highs, we have a new trend line resistance. So kind of expecting us to stay below the 550 area now on a rally back up here for corn. And probably that rally here, even if we get a little bit of a spike up here tonight, probably could be sold into. And we'll, anticipating a little bit lower price action from there. The full 50% short from our 558 highs of today to the lows comes in at 547. So again, I think we've got a bit of an inflection zone here where we have broken trend line support now as resistance, coupled with a 50 and 61.8 retracement area. It was a good rally, a good 7-cent rally off the lows of the day. But let's not forget, we still closed below the lows of last Friday on December corn, and certainly made a lower low for the day against our 2 days of consolidation inside of that prior trend day on Wednesday. So we had 2 days off the lows, went sideways for 2 days, widened the range here against Thursday's range. Friday widened the range. Monday today widened the range further, but the price average here of these last 3 days has been lower. So it's getting very hard to maintain that bullish sentiment with the pressure we've had down. If we don't see this market take off like a rocket ship here into this week, I do fear that we're going to see a bit of a sell-off before a real harvest low could be found. So again, on the short time frame here, look for that resistance into the 550 area, 447 to 550 for December corn. We'll see if that sticks here tonight. So with all that being said, everybody, thanks for joining me. Remember, everything I've talked about here today is just my own opinion, not a direct trade recommendation. And trading futures involves risk and is not suitable for all investors. But if you are looking to get active in the markets, or get active in marketing or talking with a marketing professional, we over here at Zaner would love to have that discussion with you. I can be reached at 312-277-0110. You can find me on Twitter, Facebook at Danos, SOTD, or shoot me an email at dhussey@zaner.com. Thanks for joining me, everybody. Have a great night. Good luck with the open, and we'll be back with you tomorrow and as price action develops. Sign up in the links below and in the comments section to receive the free Zaner Daily newsletter to get our entire team's commentary and current market conditions, or join my mailing list to be added to that Wednesday or Thursday at 2 p.m. webinar where we'll go over the strategies of the week, some actionable trading ideas that you could put forth or discuss for your marketing plan. Have a great day, everybody, and we'll be back with you tomorrow and as price action develops.